In 1760, UK or Great Britain became the first country in the world to adopt industrial revolution at scale. As a result, it witnessed a lot of economic progress. In fact, it also did a lot of lootmar all across the world, including in India, and became filthy rich. But have you ever paused and thought about the fact that why do we consider the US dollar as the apex currency or the reserve currency in the world right now and not the British pound? In fact, the British pound over the last 40 years has fallen quite aggressively. If you take a look at this chart, you will quickly see that back in 1971, you could buy approximately 2.5 US dollar with 1 British pound. And right now, you can buy only 1.5 US dollar with 1 British pound. So what has been the reason for this fall and why am I telling you this story in 2022? The reason is fairly simple, that something similar is happening to US dollar right now. A lot of political commentator and macroeconomists are saying that US dollar is going to get replaced by Chinese currency, which is renminbi, and China is going to take the control of the world's economic engine. So is that really going to happen? We are going to discuss 3 critical points in this video. 1, what led to the rise of US dollar in the world? Number 2, is Chinese currency going to overtake the US currency now? Third, and most importantly, what will be India's role and the impact on your portfolio? In fact, can you use this situation to make more money in the market? So we are going to have this detailed analysis and discussion. I had to study a lot to prepare for this video. It is going to be a complex macroeconomics video, but a very, very important video. So please make notes and also press the like button. It will help these type of videos reach out to more people. So let us first and foremost understand what led to the rise of the US dollar in the world, because if we can understand that framework, we can apply it to the current situation in 2022 and do a thorough analysis if Chinese renminbi is going to replace the US dollar as the apex currency. While there are many factors that led to the growth of the US economy, there are 3 critical factors. So let me try to demonstrate this in an anecdotal format. So before 1850, there were a lot of internal conflicts in the US and there was a lot of internal unrest. As a result, what happened in the US was that it was not a very powerful economy. There were other countries, for example, UK was there, several other European nations were there, that were much more powerful than the US. But within the period 1850 and 1950, something dramatically changed in the US. And that part can be triggered from a word called as innovation. So we all understand that US is a very innovative economy and there are 4 bearers of this innovation. For example, there was a person called as Vanderbilt. Under his name, there is a university that exists and he developed railroad systems in the US. There was another person called as Rockefeller, and under his name, you can find a lot of charity institutions, foundations even now. And he was the oil baron and oil mogul. So he consolidated the oil market in the US. Similarly, you would have heard of Henry Ford, who developed the assembly line model. And he started manufacturing a lot of cars at scale. So he led to industrialization. But if you aggregate all these 3 people, and I'm discounting a lot of other architects of the US economy, but if you just consider these 3 people, they had aggregation of oil, they had aggregation of assembly line, and they had aggregation of transportation. So they could transport a lot of material in bulk due to railways. This 100-year period and a series of innovations took US from literally a no-name economy to one of the most prominent economies by 1950. This was not the only standalone factor that was there. The second biggest factor that contributed to the rise of the US, especially the US dollar, was the 1914 World War I. In 1914, all the major economies, be it European economies, be it Russians, they all jumped into World War I. In fact, UK, which was one of the most prominent economies in 1914, it was one of the earliest nations to jump into World War I. And when did World War I end? It ended towards the start of 1919, and UK or Great Britain jumped into the war in 1914. And war is very, very costly. So UK lost a large chunk of their economy just fighting the war. On the flip side, US was one of the last prominent economic nations to jump into World War I. They jumped into World War I somewhere in 1917 and they only had to fight for 1.5 years. So this World War I scenario crushed literally all the economies in the world, including the US, but US economy got crushed less compared to some of the other prominent nations, and as a result, in relative terms, it became a very big economy. Now, third and finally, once the World War I got over in 1919, there were miscellaneous factors at play. US already had a very big economy that was shaping up. In relative terms, it had already gained a lot of ground, and there were miscellaneous factors at play. For example, if you look at the migration data, you can categorically see from this chart that US migration has always been very high. It is a country that has been built on immigrants. A lot of Indians go there, become CEOs of top tech companies. This is not a recent phenomena. In fact, any type of business that has been kick-started in the US and it has grown in scale, you will always find immigrants building those businesses. In fact, if I recall the statistic correctly, the average income of an American is roughly 57,000 US dollars. But an immigrant, especially an Indian immigrant's average income in the US is more than 100,000 US dollars. Correct me if I'm wrong by commenting in the comment box. I'm just quoting this from memory. So the point is that US as a nation has been built on the back of immigrants, and this migration even till today is helping the US economy massively. Add on top of this that US became the cradle of innovation and capitalism, that it fostered capitalism. A lot of other countries in the world, they did not adopt capitalism to the extent the US did. And as a result, what happened? It gave US the ability to pivot. For example, if you consider Henry Ford assembly line model in early 1900s, it pivoted, and by the end of 1900s, the tech industry took over. Why the tech industry originate in the US to begin with? Because there was wealth of capital that was already available, and because of this fostering of capitalism, this pivoting became easy. So as a result, the US economy kept going up and up in real terms. So this story beautifully played out up until the 2008 crisis, when the US debt giving model was working wonderfully well and the US economy was getting richer by the day. But anything that goes up, including the US economy, needs to come down at some stage, and now the pundits or the economists are claiming that, you know what, with the rise of China, with the internal conflicts that are picking up in the US, with the excess money printing that the feds are undertaking, they just turn on money printer for fun. So they keep on pushing more and more and more money. So all these series of different negative things is putting the US down. And 2020 has acted as a catalyst, very similar to the way the 1914 World War I acted as a catalyst, where this change of power is going to take place between the US and China. So you can clearly see from this graph that the percentage share of China in the world trade has been going up, and for the US, it has been coming down over the years. So this brings us to the second question of the video, that is China going to take over the US? If yes, why it will take over? Second is when it will take over. Okay, so let us try to do a very quick analysis. I can create a separate video on this topic altogether. Let me know in the comment box if you would want me to do that. But here is the quick story. So I'll make you see 3 graphics and then I will do a quick commentary on it. So the first graphic we already covered, that the share of China in the world trade is going up, and for the US it has been coming down. So this is graph number 1. Second key thing, if you analyze the manufacturing prowess, so the word of the day today is prowess. Let me know what does that mean. So the manufacturing prowess of China is again picking up, and for the US it is going down. So this is the second key graph. And third and final graphic is very, very worrying. This difference shows the amount of debt that the US owes to China. Now all these 3 graphs interrelate, and I will explain you the macroeconomics behind it. So here is the quick macroeconomic story behind these 3 graphs, and there are 3 critical points that you need to remember. So first and foremost, that as the share of China in the world trade goes up and as its manufacturing prowess increases, it will be able to control more money in the world. So that is fact number 1. Now, in the last decade, or rather in the last 3 decades, China's manufacturing power has been going up and up. So as a result, China has been able to control a lot of debt from the US. Now, if you require a very quick input as to how this debt game is played out, let me quickly explain that also. This is a highly complex macroeconomic viewpoint. So please press the like button if you like the explanation. So what happens is this, that US and China trade with each other and trade with other countries. And in what currency do they trade? So they trade right now in US dollar, mostly speaking. Why is that? Because US dollar is the primary or apex currency. It finds more usage. For example, India might also want to use US dollar. China might also want to use US dollar. US itself would want to use US dollar. So this entire US dollar that you see printed. So let's say that there are 10,000 $1 US note that is out there in the world. So what does this indicate? This indicates the amount of total debt on the US, because every time the US government prints any amount of money, that becomes a debt on them. Debt simply means that the US government has taken a loan or an obligation. For example, if you zoom the note in India, what does it say? It says that I promise to pay the bearer the sum of 100 rupees. So this is an obligation on the Indian government. Similarly, whenever the US government prints currency, it becomes an obligation for them. So right now, if you check that how much debt the US has taken from China, you will be surprised to learn that they have taken $1.06 trillion of debt as of January 2022. You will say that, okay, how big is $1 trillion? Is it large enough? Is it small enough? Okay, so let us look at the external debt of different countries. And here, if you check the debt of India, you will see that India's external debt is roughly 615 billion. So India's total external debt is roughly 35% less than the debt that US has taken from China. So that is how large that $1 trillion debt is. So now comes the natural question that will China kill the US because they are holding $1.01 trillion of debt? Of course, it would want to kill the US the very next day. They are not friends, they are not hugging each other. And we don't see Joe Biden or Donald Trump kissing Xi Jinping and all that stuff. So that is not happening. So what is exactly going on? So here is a very quick simplified summary. So number one, if the Chinese decide to flood the market with US dollar because they are holding a lot of US dollars, so to say, and they can decide to sell those US dollars whenever they feel like. So it is like selling stocks. So that will devalue the dollar at a very, very brisk pace. Is that something that China would do? The answer seems like no, because if they crash the US dollar, even their own trade will suffer. It will crush their own economy also. It is like pressing a self-destruct button. Yes, fine, you will kill the US economy, but in that game plan, even you yourself will get evaporated. So what is it that China is likely to do? So they will maybe wait and watch. So what exactly will they wait and watch on? Okay, so basically two things. There are multiple other things. I'm simplifying this. So please take it in that spirit. So first and foremost, the Chinese government will not derail the US till the time and international collaboration systems are built up from their end. So you might have seen that China is building a lot of international partnerships via the Belt and Road Initiative. What are they trying to do? They are trying to put their foothold across different parts of the world. They are building a railway line to Europe. They are building a lot of physical infrastructure in Africa, in Sri Lanka, a bunch of other Asian countries. They are also trying to capture Taiwan, whatnot. What are they trying to do? They are trying to do both hard and soft diplomacy. Hard diplomacy means that go and literally acquire a country. For example, they are planning to invade Taiwan. Soft diplomacy means that, you know what, give people debt. For example, the Pakistan government had taken a lot of debt from China. They went to China again to get their debt restructured, and Xi Jinping said to Imran Khan that, okay, you know what, time for you to dance. No, he did not literally say it, but that is what he literally meant, that he gave Chinese really bad terms in terms of debt restructuring. So this is slightly more softer diplomacy. Why are they doing it? Because you might have observed that post World War II, the international systems, for example, take a look at UN, WHO, World Bank, you name it, IMF, who controls all these international agencies? It is controlled by the US. Because if US as a normal nation would go to a country like India and say that, you know what, I have come up with brilliant US dollars. Do you want it? No one is going to use it. They are going to put soft diplomacy pressure on you. For example, if you watch one of my earlier videos, I spoke about the fact how is India's forex reserve made of. It is made of SDR or special drawing rights which are related to IMF. So please go and watch that video. It will give you more clarity. But to cut the long story short, these international systems need to be built first in order for a country to exert its influence on other international parties. Second key point, the alternate money system also needs to be built. So after 1914, as I discussed on several of my previous videos, that US aggressively promoted the Keynesian economics. So they became like a money printing agency, so to say, and that was the monetary system that they adopted and made the other parts of the world also adopt. So China also needs to come up with their own system. They are working on their own digital yuan. So let's see how that currency plays out. But to cut the long story short, that in the short term, it doesn't seem like that China will derail the US intently unless they have these two key pillars sorted out. One is around international coordination, that countries want to go with China for some reason, or China is able to exert enough influence over them, be it through hard diplomacy or soft diplomacy. And second is that it needs to create a new monetary system which is not US dollar driven. So if both these things are sorted out, then yes, that would be the time to transition from a US driven economy to a Chinese driven economy. Now you would say that, Akshat, you know what, this is like very depressing because China, they spread some virus which I cannot name because otherwise this video will get banned. So they ate some wild animal and spread that virus and whatnot. So I don't want to go with China. Can India stand up to China? Okay, so let me show you facts. Please don't stir up nationalistic feeling here. Please look at data. I'm just presenting data to you. So let me present 3 facts here. So fact number 1 is that Chinese GDP is roughly $16.7 trillion. India's nominal GDP is roughly $3 trillion. So we are 1/5 the size of China in terms of the moat. Now people give really weird arguments here. For example, we will say that, you know what, compare the GDP in PPP terms. Okay, what are you going to do? You are trying to compete against China and the US, so that PPP comparison is not correct. You have to do an absolute comparison here. So this is fact number one. Fact number two, a lot of people say that, you know what, in China there will be internal unrest that will be caused because Chinese government really crushes people. And income inequality in China is very, very high. Again, this number is not correct. If you compare the income inequality in India, it is 24% higher than in China. Third key fact, we say that, okay, the consumer spending, or India has a very big consumer base. So many people are young, they will buy a lot of stuff, whatnot. And Chinese population is aging, so they will buy less. But right now in consumer spending, Chinese consumers spend roughly $15.7 trillion. Indian consumers spend roughly $1.5 trillion. So there is a huge difference in terms of the income set which we are comparing. Does this mean that we are doomed? The answer is no. It does not mean that you should shift your Indian portfolio to Chinese portfolio. You need to listen to a couple of more points. One is that our demography dividend is high. And the hope is that going forward, a lot more people will be placed. They will be given better jobs. A large part of our workforce will migrate from agriculture-driven economy to service or manufacturing-driven economy. If that happens, that will improve our GDP per capita from roughly $2,000 to $4,000. And at that stage, India becomes a high value market. Second key point is that India is one of the best. In fact, let me revise the statement that India is probably the best emerging economy out there, and it will continue to see a large influx of foreign investors. It is happening for a wide variety of reasons. One of the primary things being that we have an English educated workforce that can create services that can be exported out of India. And the cost of production of those services in India will remain low. So that is a winning mode for India. If India can figure out a way to use its workforce productively and in high-end jobs, India will become a massive economy in the next few decades. So this brings me to the investment section of the video, that what are some of the key things that you should be doing. So I have two pieces of advice for you. That number one, if you are looking to invest in India from a long-term perspective, then you must take positions in industries that support capital formation. For example, banks. Because if Indian economy has to grow, banks have to grow. If more capital is coming to India, it will be deployed one way or the other by the banks. They will be the one giving loans. Their loan books will become better and stronger as more customers avail credit. So this entire flow of credit will be managed by banks, and therefore I'm super bullish about banks. I have said it multiple times, but this is one of the key insights that I can give you if you are trying to build a position for the next 10, 15, 20 years in India. This is most likely going to happen. Second key thing, you must diversify between US and China also. So far, we have been doing US oriented investing only. I have already started to take position in Chinese stocks. I have already spoken about it. Alibaba seems to be giving decent returns now. So I'll make a separate video of investing in Chinese economy in case some of you are interested. And as a final section, since this was a very complicated video, let me summarize 3 key facts that I see playing out. Number one, the US economy is going down and it will continue to go down. Almost everyone unanimously agrees on this fact. But this decline will take some time. It's not as if that it will happen in the next 5 years or 10 years. No one knows how long it will take, but these type of changes take a lot of time. Second key thing, that the Chinese economy is going to rise. We must, as investors, as international investors, if we keep the nationalistic pride aside, from an investment diversification viewpoint, we must learn about the Chinese economy also. Third and final point, that Indian market is huge. It is one of the best emerging economies in the world. It will continue to grow. Please be bullish about India. India will become a great bridge and it will play a pivotal role in this transition from US to China if that ever happens. So let me know, what did you think about this video? When do you think China is going to overtake the US? Will it ever overtake the US? I will also post my answer in the pinned comment. Thank you so much, and I will see you soon.